Thank you for staying tuned. Now, welcome to Business Nigeria, where we bring you up to speed with happenings in the business world that's across the country. I am Tolulope Ogunjobi. Now we begin with a look at the major indices that influenced economic performance during the week. Nigeria's economy contracted 1.5% in 2016 due to the lower oil revenues and a shortage of hard currency. The National Bureau of Statistics said on Tuesday its first annual contraction in the quarter of a century. Africa's largest economy slid into recession in the second quarter of 2016 as a slump in crude prices hammered the OPEC members' public finances and battered the Naira's currency. Well, crude sales make up to two-thirds of government's revenue. Meanwhile, the equities market started the week upbeat as NSE's all-share index advanced by 0.49%. to having the year-to-date return pegged at minus 4.67% at the close of trade on Monday. The bankers sector accounted for 516.15 million of total volume traded at 6.01 billion by value and was followed by the beverages and food products sectors that accounted for 24.33 million and 1.98 million worth of volume traded respectively. While in the OPEC basket, crude oil was traded at the beginning of the week at $53.61 per barrel and ended the week being traded at $53.40 per barrel in the international commodities market. Gold was traded at the beginning of the week for $1,258.80 and ended the week being traded at $1,233.90 in the international commodities market. The Central Bank of Nigeria on Thursday said that its current intervention in the foreign exchange market was purely to ease the pressure on the Naira and had nothing to do with succumbing to blackmails from some quarters. CBN's Acting Director of Corporate Communications Department, Isaac Okorafor, stated this while reacting to some trending posts on the social media to the effect that the current appreciation of the Naira was as a result of the alarm raised about the illegal sales of Forex at a ridiculous rate to some people. Okorafor explained that there is no relationship between the allegations that the dollar was being sold at 61 kobo and the current appreciation of the Naira. According to him, CBN has done its intelligence work on the market and came to realize that much of what was driving the demand at the Bureau du Change and parallel market was speculation. The Apex Bank spokesperson noted that since the new Forex policy, the CBN had intervened with over $500 million in the market, which had led to the Naira gaining strength. In other news now, the Debt Management Office on behalf of the Nigerian government has made public the facts behind the listing presentation of the made in $1 billion Euro bond. We have details in this report.
That bond is being listed on the floor of the Nigerian Stock Exchange, the very first ever foreign currency bond to be listed on the floor of the Nigerian Stock Exchange.
The message from the Chief Executive Officer of the Nigerian Stock Exchange was simple. The Debt Management Office's success story in the oversubscription of the $1 billion Eurobond was a testament of the growth of the Nigerian capital market. And he believes the greatest beneficiary of this success will be infrastructure long bedeviled by years of decay that has limited the realization of our economic growth.
As an FX-denominated instrument, the Eurobond will trade and settle in the currency of issuance, which is USD, thus setting the foundation for multi-currency capital raising and trading in the domestic market. This will open up hybrid capital raising options and create additional portfolio diversification opportunities for investors on the Nigerian Stock Exchange. This listing of the $1 billion FGN Eurobond, which marks our fifth listing in the bourse in 2017, lends credence to the NSE's commitment to continuously innovate and champion the growth of the Nigerian capital market.
For the Debt Management Office, while we may still need to do more to win even the confidence of investors, the Eurobond success shows a renewed commitment to shake off losses.
The listing of the bond on the floor of the Nigerian Stock Exchange is part of the commitment of the Debt Management Office to democratize our activities, to democratize the benefits of what we do. So we want the Nigerian, the ordinary Nigerian, to have access to trading on the Eurobond, to buying and selling the Eurobond, not on the floor of the London Stock Exchange where it is conventionally registered, but back here on the floor of the Nigerian Stock Exchange.
Before this meeting, the Director General of the Debt Management Office rang the closing bell at the stock market, marking the close of trading for the day.
Indeed. Now, with me in the studio to discuss this is the market analyst Mukhtar Mohammed to look deep into this. But before we go to this bond that has been listed, I want to ask you this with regards to the forex market and this development which we have now. The Apex Bank spokesperson is saying that speculations and all of that is what's been happening, and $500 million has been injected into commercial banks and all of that to address this. What do you make of this new move by the Apex Bank?
Very good move. They're giving the Naira the leg, and we hope they will be able to give him the wing to fly, because now it's the leg is running very well, but he need wing to fly so that we could be able to have stability. So as it stands now, it's a short gap measure. There's still more to be done. They still need to open up the foreign exchange market. They still need to bring in the banks there so that the banks too could use that as another aspect whereby they can get credit line to attract more foreign exchange to sell to their customers that are in dear need of it. I think the CBN have to open that area very well. Then we'll begin to see the Naira, we'll begin to see where the Naira and the dollar, we could have one exchange rate despite the type of rate we have now. But like I said, pumping a lot of money into the system is not the way out of stability of the system, because we are doing that because we have a fairly healthy foreign reserve, which we could not say because the volatile nature of the oil price. Today it's selling for 53, but tomorrow you don't know what it will be like. So they need to come up with a long-term strategy on how to stabilize the Naira to the dollar, so that by then they would have been able. Remember, CBN have two reasons to do this time: either the tilt inflation or the tilt towards growth, the tilt towards inflation. So if they are able to curb the battering of the Naira, then they will begin to address the inflation area, and then they will begin to come together with a fiscal policy so that we can begin to see the growth.
Indeed. For many have argued, I think the issue now is sustaining this move, right? That's what you're talking about here.
Yes.
Because it's not really easy to sustain this.
It's not really easy to sustain it because, and the bad thing for us Nigerians is that the more oil price goes up, the more it becomes problem for us, because that means we don't refine any of this product. That means refined product coming into our country will go high. So sometimes what we get in here, they will now begin to use it to pay subsidy, because you don't want the price of petroleum to go up, because all Nigerian life is tied around that area. So there's a lot of work to be done. Thank God in 2019, or thereabout, between 2018 and 2019, a fourth private refinery by Aligu Dangote will come on stream. Maybe that will help, because the current government-owned refinery, just yesterday we were told that the Warri refinery was shut down because of power outage. So until we address the issue that has to do with refining petroleum product here, at least having refined our product here for the 70 to 80%, then we only import 20%, then we begin to have stability.
Oh, okay, that's just, by the way, we are going to be looking at the issue relating to the bond, but we'll go on this break. I still have Mukhtar here to look more into the facts behind the listing of this $1 billion US dollar Eurobond. We'll be back after this break. Please stay with us on Business Nigeria. We're glad to have you back. Now we're looking at the $1 billion euro bond, which was listed at the Nigerian Stock Exchange. Yesterday, the Director General of the Debt Management Office was there to actually launch this initiative. And I have Mukhtar Mohammed here, who's a market analyst, a player in the capital market, and is going to be giving insight into issues surrounding this. Now, let's start it this way. Now, what does it mean to list a bond on the stock market? Let's talk to a layman now so that he understands how this affects his day-to-day activity.
Well, what it means, very layman language, that it's a very liquid, you can access it daily, you can sell, you can buy. It's just like you list a stock or a share on the exchange. So in a layman language, you can buy these stocks through you can get access to this bond through your brokers.
But according to the DG of DMO, he's talking about being listed on also the London Stock Exchange and the Nigerian Stock Exchange. There's something there, the dual listing. Yeah. Give us an insight in.
There's a dual listing. It's listed both in the London Stock Exchange and it's listed in the Nigerian Stock Exchange. So it could be traded both here in Nigeria and there in London. But the bottom line is that what is going to be traded are those people that bought it in the roadshow in London. They are the ones that are trading it down here in Nigeria. So they are trying to make Nigerians to have opportunity to also part owner of this bond. Remember, it's a long time, 15 years bond. The coupon is 7.5, which is the highest of all coupons in emerging markets. So in emerging market, you talk about emerging market, talk of Brazil, you talk Indonesia, some of the emerging markets, we have the highest return on 7.5%. And now what does it entail? Why was it oversubscribed? Because they saw that as an opportunity. Because if you look at the inflation rate in most of these developed countries, it's based on like 2.1% or sometimes 0.1%. So when you are getting a return of 7.5%, you are making huge return. But to the Nigerian own side of the listing, our inflation rate is about 18-point-something%. So we are not really benefiting for it that much like we think, but it's just to make it very liquid, to make it very attractive. Once it's liquid, it means that it could be traded every day, and that also is going to give international investors the confidence to trade on the bond. And remember, the federal government is also going back to have another 500 billion. So this is a moral boosting confidence that both it's listed here, that is the, investment in a part of the country, in any country, is based on two things. For the foreigner, it's based on perception. For the indigenous people, it's based on hope. As it stands now, there is hope in the land. There seems to be a big hope. People begin to look optimistic, hopeful that, no, it's like things are beginning to pick up, things are going to get better. And so that hope will translate to perception for international investors that, oh, if these guys now, the oil price is going up, they have a healthy reserve, so we can come in here, so we won't have problem repatriating our money back. So in two ways, is beneficial to the economy.
Indeed, just like you identified, it's the first foreign currency denominated security to be ever listed at the Nigerian Stock Exchange, right? I think I'm correct with that. But just like you also agreed that this bond was oversubscribed. I think about 780%, was oversubscribed. Now, would you agree personally that really investors are now having that confidence back in Nigeria?
Look, it's a two-way thing. Look, it's a government bond. Then the foreign investors, they don't just go to invest without looking at the table, looking at the statistics, looking at the data. Now, what it means is that 7.5% is the coupon rate that you get every year for investment in this bond. Now, looking at it, that our oil revenue in a day alone is able to pay them that coupon in a year. Basically, that's what they looked at. So then looking at the 7.5% compared to other markets and compared to their inflation rate, that was a good deal. So why was it oversubscribed? It was a good deal for the investors. Was it a good deal for Nigeria? Well, as it stands now, we needed their money more than they needed ours. So we need a hard currency, we need a forex currency because we want to develop our infrastructure, which we don't have the manufacturing companies here. So we have to import some of these things to develop. So by and by, we were the one that needed them, so we had to give them a good rate. But when you look at other emerging markets, like I said before, you realize that their bond rates to the foreign investors are very low. You see them doing at 4.5, some of them are doing like 3.5. But Nigeria is doing 7.5, which was good. That's, for me, basically the oversubscription of this bond has to do with that. We have the power, the liquidity to meet up to this challenge every year without blinking, and then it was a good rate for them.
Indeed. Now, talking about infrastructure development, which is what the government has actually said most of these funds will be used for, capital projects and all of that. How soon do you think we will start if I could use the word, dividends of democracy? How soon do we start getting it? The man on the street wants food on his table. That is what he's after. We know what we've been through all the while.
Unfortunately, the man on the street wants food on his table. He has to be patient for the food to come because you have to cook the food. Yeah, it's still on the fire. So it's not going to just, you don't eat the raw food. So the man on the street will have to be patient. We have to realize that, like the saying goes, Rome was not built in a day. We have to realize that we have had infrastructural decay for over years. It cannot be addressed at a go, and we should not be expecting immediate returns, immediate infrastructural growth. But the good thing is the government has started in a good footing. This is an international bond. This is money. It's not government money. This is investors' money. They are going to invest it in infrastructure. Now look at the infrastructure they are looking at. They tie this. Why I'm so excited about this, they tied it to a particular project. The rail project, the road project, and on this project also, remember, they are planning to put toll. They are planning to get, and then they will employ a lot of people. Taxes will come from this project. And so when you look at it, it's a means of galvanizing the economy. At the end of the day, you see that whatever Nigeria have invested, collected, Nigeria will be able to make more, because over time you realize that if the investment goes where we are paying the toll, we are taxing people, the foreigners are coming in, then we begin to add to the bottom line of the government, and that also will add to our foreign exchange reserve. So it's going to bring up a big war of activities, which we are excited about, but we need to put our house in order that this present thing is not hijacked by politicians or by corrupt practice.
Indeed, the Nigerian stock market, you cannot underestimate any stock market in any country, and the importance of this market also cannot be overemphasized. Now, this move, many say it has reaffirmed government's commitments to deepening the Nigerian capital markets. What do you make of this? I
agree. This is the first time we're having government really deepening, rather than just coming, giving us treasury bills, giving us mopping up money. This is the first time we're having a government come and look, we want to use the capital market. Look, every part of the world, the capital market is the barometer of your economy. Your economy is determined by the capital market. How well your capital market is performing is what the foreigners will look to determine how well your economy is performing. If you look at, just talk of the U.S. economy, before the address by Donald Trump, the President of the United States of America, the market was going down. The market was neither here nor there. But for the first time, they passed the 21,000 mark after his speech, and that shows now the people are saying, no, economically we think Donald Trump has the answer, and so that also brought confidence. But the confidence could be seen from the market. The performance of equity in the market all started becoming bullish. So that's how you determine, and that's how you attract investors, because the capital market itself is a different ballgame when you have foreigners, where you have level playing field, where you have private individual, because every economy is developed by the private sector. The government are just there to provide the enabling environment. That's why people keep saying government going into the business of providing infrastructure for us. Then you see more entrepreneur comes up. That's what the capital market is all about.
Private sector participation, which you've actually identified now, is very key at this definitely. Time. We've seen the acting president, all the moves, with the private sector. They're carrying them along, particularly with trying to achieve the ease of doing business, trying to increase Nigerians' ranking when it comes to the ease of doing business. How would you assess some of these moves? I
think the best thing that happened in the past 2 years for Nigeria is the acting president. He's taking the bull by the horn. He seems to be a man that knows his onions. He seems to be a man that he's addressing the Niger Delta issue. He's visiting Akwa Ibom State. He's visiting Delta State. He's visiting River State. He's talking to the stakeholders. For the past 2-3 weeks, we have not seen wrapping up of oil pipeline any longer. We see him engaging, say, look, instead of destroying all this illegal refinery, let's find a way to engage them. You see, you could see the body language is a body language that say, look, we are Nigerians, whether you're from the north, from the south, all we need to think now, put down our political differences. Let's see how we can address our economy. You saw the move that he made, came to the airport, look at it, say, look, this is not a stop sign if you want to attract foreign investors. Or 48 hours after he said that, the airport new face look, work is going on in the airport. You just have to give it to him that he seems to know what to do. It seems to be moving in the right direction. It seems to be the best thing that's happened for a while. Yeah, but like you say, it's a teamwork. Yeah. Even the president, if the president was around, he may have done the same thing. Yeah. So he's not doing it out of the knowledge of the president. So that's one thing Nigerians should have in the back of their mind. But we have an acting president that seems to be moving with speed, and it's addressing issues gradually. And we are seeing, like I said, there is hope Now people are beginning to see hope. And once there is hope, economy pick up. Because a life of an economy is like a life of a man. Once a man being with a lot of hope, he attracts a lot of people to him. So that's the same thing with the economy. But if the indigents, the owners of the economy doesn't have hope in the economy, then why will I invest in those people? So that's how it is. So now we have an economy that is booming and we have hope, and then we see that perception of the international investors. Though they're saying us to devalue our currency, I don't think we should devalue. Our currency has devalued itself more than they would have even allowed us to devalue it. So now is any foreign investor that's interested in doing business in Nigeria will come in. Anyone that's not interested in doing business in Nigeria will not come in. So it's an opportunity for Nigerians also, for the corporate Nigeria, for the pension fund administrator to begin to take ownership of our economy and begin to see how we can indigenize our economy, not by driving the foreigner, but holding last chunk of our economy.
Indeed, there's always a pleasure talking to you, Mukhtar Mohammed, market analyst, giving his views regards to this bond and also issues surrounding the Nigerian economy. Thank you for your time on Business Nigeria.
Thank you, Tony Okwe.
Well, time flies. That's all we have for you today on the show. Join us another time for more in-depth and, of course, insightful analysis. I am Tolulokpe Ogunjobi. On behalf of the entire production crew, thank you for watching. I'll leave you with the graphics of the exchange rate as it stands today. Bye for now.